Welcome to Money Chat Today. We are brought to you by Investor Schooling. You can attend a complimentary class by going to investorschooling.com. I'm your host, Larry Steinhouse, and today we're going to be discussing Fed Chairman Powell's inflation report and interest rates. We also have earnings in focus for Facebook, Ford, and PayPal. We'll be also discussing this morning's earnings announcement for BA, which is Boeing, McDonald's, BMY, Bristol Myers, and ADP, and of course, what happened to Apple yesterday? They crushed earnings. What happened? I can't believe it. So we'll be talking about that. I want to bring up something really important. The president today was speaking in Allentown, Pennsylvania, and he was at the Mack truck plant. He delivered remarks on the importance of American manufacturing, buying products made in America, and supporting good-paying jobs for American workers. I would say that that's quite obvious, that we should be all buying American, but I'll let you decide what you want to do when you go buy your products. All right, well, I want to get into Powell's discussion today, because Powell's discussion was pretty important and how it's going to affect the future of the stock market and our pockets, frankly. So first of all, the Fed has decided to hold interest rates near zero and says the economy has gotten better even with pandemic worries. I want to talk a little bit about the pandemic, and I want to talk a little bit about the economy and how and why this stuff is important, and also I personally believe is a mistake. So I've been saying, I want to just let you know, I've been saying that since Obama's last 2 years of presidency, remember we had another president before Biden, we had Trump, and before Trump we had Obama. For the last 2 years of Obama's presidency, I've been screaming at the computer saying, raise interest rates, raise interest rates, raise interest rates. And the interesting part is, of course, that now interest rates are still near zero, which is really great if you want to buy a house. It's really great if you want to take out loans. All that's important. But the problem, of course, is the fact that in an emergency, we actually can't lower interest rates. Now, interestingly enough, then the pandemic comes and we can't lower interest rates, but the Fed, instead of lowering interest rates, decides to give out money, or I should say not the Fed gives out money, but the government gives out money, and everyone is making money on, I don't know, basically fake money, which is kind of neat, but guess what happened there? That caused inflation. Now, you've seen inflation, you've seen some crazy prices out there, and some crazy things are going on with prices, right? We saw the lumber market take off. I know as a real estate investor, we have a lot of people who invest in real estate. They're renovating their properties, and what do they find? They find that the lumber prices have gone up and the price of cabinets gone up. In fact, I just did a renovation in one of my properties, and I gave the guy, I know, a pretty decent amount of money, and when I went to see the renovation, it looked like, what I normally would have given maybe 1/3 of that just a couple of years ago. So it wasn't all that great of a renovation, but it's good enough to rent, so I'm okay with it. But at the same time, I got what I can afford now, what the market is bearing right now because of inflation. Now, they basically said also that the interest rates again is going to be near zero, but wait, because we have to raise interest rates soon, because if we don't raise interest rates soon, there's going to be a problem. All right. I want to also say one of the key points that Powell said was the sectors most adversely affected by the pandemic have shown improvement, but have not fully recovered. The post-meeting statement said inflation has risen, largely reflecting transitory factors. Overall financial conditions remain accommodative, in part reflecting policy measures to support the economy and the flow of credit to U.S. households and businesses. But I want to go back to the first line. The sectors most adversely affected by the pandemic have shown improvement, but not fully recovered. Ding, 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 ding. Opportunity, guys. This is opportunity screaming. I spoke about this yesterday, where you should be buying the travel sectors now. You should be buying AAL, CCL, RCL, Norwegian. In fact, Boeing, we're going to talk about that in a minute, Boeing hit a grand slam today because they had unexpected earnings. In fact, let's even get into it, because that actually is where we're leading to right now. So let's talk about Boeing's earnings for a minute. So Boeing BA. The interesting part about Boeing was that the earnings report, they actually expected, you ready for this? They actually expected that Boeing would lose, let me just get the number right, here we go. It would lose basically 83 cents per share. It would lose. it turned out making 40 cents per share. That blew Boeing out of the water. It was fantastic, fantastic number. In fact, I was really happy because I had some Boeing options, and it actually let me get out. I made about 25-30% profit in a couple of days. I love it when that happens, and that was a fantastic play for me. But Boeing, they basically killed it. They blew it out of the water. It's fantastic numbers. All right, so that's a great thing, and that also shows that if airlines are ordering airplanes, what does that mean? That means that they need more airplanes. Why do they need more airplanes? Number one, they want to upgrade, of course. They also feel that they need more planes to be in the sky, and they need to have more people. That means they're going to have more people in the future. So what does that say? That says that AAL or DAL or all of the airlines are going to be great plays right now. So go into them. I happen to like AAL. I think it's a great play. I can't remember where it was at the minute. Let me just take a quick look and see where AAL is, because AAL as a play, again, is great. Hold on a second. Let's do this real quick. Oh, it looks like we might have even hit okay, so AAL today, real quick, is at 2163. I believe that this thing is going to be easily 25 in a very near future, within a month. No problem whatsoever. I think it'll be an easy play. All right, I got a feeling that we might have missed this, and here it is. Facebook's earnings are out. So check it out. Facebook's earnings are out. Let's see what happened with Facebook earnings. So first of all, Facebook beats earnings expectations, reporting fastest revenue growth since 2016. This is the same exact thing that Google was saying, and Snap was saying, and Twitter was saying, that they've had incredible run on money, beats earnings. But here's the interesting part. Facebook is now down 14 points. This is exactly what I predicted yesterday. I believe I mentioned it yesterday. What was going to happen was, because Snap and because of Google and because Twitter pushed Facebook up, it had to be unbelievable earnings. Like, they did really good, don't get me wrong, but it had to be earnings that was so unbelievable that it had to blow it past what the expectation was, and it didn't. So now they're selling off because they realize that, hey, it's already done. There's nothing here anymore. Let's move on to the next play. And the next play, of course, is going to be something else besides Facebook. So that's why Facebook is dropping right now. Now, I also noticed that every time Facebook has a play, what happens, of course, is they go after earnings, they go down, and then they go back up. All right. So we're going to take a quick break. I'm going to come back with Ford's earnings report. And here we go.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors, and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way, and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. Investorschooling.com.
Welcome back. Welcome back to Money Chat Now. I am your host, Larry Steinhouse, and we are going through the earnings reports. And right now we're going to talk about Ford. We're going to talk about the Ford's numbers. So first of all, the nice thing about Ford is they blew away expectations. Now, it's funny because I said earlier that I didn't think Ford was going to do all that well, but sure enough, they did well. They did fine. Now, Ford is up about 30 cents right now after earnings, but here's the cool part. They raised their outlook, so they're basically saying that they're going to probably sell more cars than they normally would have sold. Now, they're moving into the electric business. They're competing with Tesla. They're competing with everyone else. Now, some of you guys might know this, might not know this, but there is a rumor that almost every car by 2030 will be electric, and you won't be able to buy any more gas-powered cars. I find that difficult to comprehend, but that's what they're shooting for, so it may actually be a neat play for all the automotive manufacturers. I want to see real quickly what Ford did. Let's see if we can find it. Hold on a second. I don't know. I can't find Ford, but that's all right. No big deal. We can go for the next one because I actually want to talk about McDonald's and McDonald's earnings this morning because McDonald's had an earnings announcement this morning, and the McDonald's earning announcement they actually the expectation was they would do $2.11 per share, and they did $2.37 per share, which is great. Again, they beat it. The problem, of course, is when they beat it, they didn't beat it by enough to make the stock really pop, and sure enough, it closed down 4.5 points. I would actually say if you want to get into McDonald's, I would look at McDonald's probably in the, I'm going to say the below 235. I'm even going to say about 230 would be a good time. So if you want to sit there and wait for it to drop down a little bit and go into the 230 range, that might be a good place for you to buy McDonald's stock and to rock and roll. All right, next again, another one that I wanted to talk about really quick was BMY, which was Bristol Myers Squibb. And Bristol Myers Squibb again had earnings. Now their earnings report, they were supposed, and this is weird because this is how the stock market works, that you can never anticipate what's really going to happen. Because we just talked about McDonald's beating by, by 26 cents. So here you go. Now we got Bristol Myers Squibb, where the consensus was $1.89, and they did $1.93. So they beat by 4 cents, and the stock goes up. So you can never actually tell what's going on. Bristol Myers went up by about $1.25, but Bristol Myers is kind of a boring stock, but gives a nice dividend. It's giving you a dividend of 2.85%. For you guys who don't understand dividends on stocks, if you're buying stocks with dividends, it's nice. It's nice to sit there and have them. And what you can do with them, of course, you can collect the dividend. But what we also teach students at Investor Schooling is we teach people how to sell covered calls on stocks that pay dividends. So you can hold on to the stock, and let's say, for example, this stock right now, I don't know, it's going for 60, 68, 73. You might want to sell a 70 call, and I don't know what you're going to get for it, whatever it may be. Maybe you'll get 1 or 2% for a week. So you can sell it for a week, you get 1 or 2% on your $68, which, by the way, 1 or 2% a week is not bad, considering. And if the stock goes down, you didn't lose the stock, you kept the money, but you also got a dividend of 1.96%. 2.85% as well, which is also really nice. So that's why we teach covered calls. All right, I just want to go back over to Facebook real quick. Facebook is still down almost 12 points. And again, this was really obvious that this was going to happen. Did I put a put on it? No, I didn't, because I'm tired of getting puts and getting burned. So I didn't do it. Okay. All right. Next, I want to talk a little bit about what was the next stock I had for us today. Let me see what it was. It was, I know it's here somewhere. ADP, yes, ADP. I want to talk about ADP real quick, and let's see where ADP is right now. So ADP, the nice thing about ADP is when ADP has good earnings, and I want to talk about, real quick, I want to find their earnings, but when ADP has good earnings, one of the things that's really nice about ADP, when ADP has good earnings, that means the economy is moving great. Think about that, right? So we got people with jobs. If ADP is up, that means there are people with jobs. That means ADP is making money because they make money on payroll. Now, I don't know if you realize how a company like ADP actually makes money. Yes, they charge a fee. So we have a company, we have payroll company, whatever payroll company it is, it doesn't matter. But companies like ADP, who have most of the payrolls of most of the companies out there right now, they make money, of course, on charging fees from each company, but they also make money on the money. So let me explain what that means. If I have a payroll, and let's say it's $100,000 a week payroll, whatever it may be, right? It's $100,000 a week payroll. ADP actually takes that $100,000 out of my account, holds on to it for a day or two while everyone else is cashing their check. So while the employees are cashing their check, they've held my money for about a day or two, and they make peanuts on it, but they make a lot of peanuts on it because there's a lot of $100,000 out there that makes a lot of peanuts, and that's why it works so well for a company like ADP to make money on people's payroll. And that's basically how the whole thing works. All right, what else? So we got out here. Actually, we're running into a little bit of a time crunch, so I'm going to run to another commercial real quick, and then we're going to come back and we're going to talk about how to make money in this market.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
Welcome back to Money Chat Now. I am Larry Steinhouse, and I am your host today, and we are talking about earnings. We are talking about some really good earnings and some bad earnings and some great plays and some bad plays. So again, I want to talk about? I want to talk about what happened to Apple. That's one of the things I want to talk about. So yesterday, Apple blew it out of the park, right? So why didn't the earnings go up? So all of a sudden, and if you remember, it was kind of funny because I had mentioned it yesterday that apparently Apple is not a problem. It's not a problem with the chips. And the reality was they actually put an article out today that said that Apple is going to run into a chip problem with the iPhone. So they're going to have trouble making iPhones because they don't have enough chips. Now, I have to tell you what I think about that. I think that that's total malarkey. Forget it. It is not going to happen. We also talked about yesterday how Apple, if they never sold another iPhone ever again, they would make more money than any company out there based on just their services alone. So it's not an issue that Apple is going to run into a chip problem. I also don't believe they're going to run into a chip problem. I believe the chip problem is going to end very shortly. I think the chip problem I'm even going to say that it actually ended yet, has already ended, but it just hasn't moved into the warehouses yet, and the chips aren't actually moving. That's just a speculation, but you watch and you'll see that's actually what I believe is going to turn out to be, and Apple's not going to have a problem at all. However, Apple is sitting there. It actually went down only $1.75 today, which to me I believe is an opportunity. Now, if we can get Apple below 140, I'd say it's a buy. I'd say it's a great buy, and it's a great buy if you're a stock options trader. And I would even go in again anything below 135 as a secondary buy if that does happen. So Apple to me is a good play. I would go all for it. So let's talk about real quick. I think we had PayPal. I'm sorry. Was it PayPal? Yeah, PayPal earnings coming up right now, and let me see what PayPal did. All right. All right, so PayPal, oh boy. So PayPal is now down 23 points, which I'm kind of surprised. I don't know what they did in earnings. Let me just see if I can find it real quick. I can find what they were supposed to do, and I don't know. It's down here somewhere. But they clearly didn't do what they expected to do. I cannot find the earnings report. I'm sorry about that. But I'm going to guess that they didn't come anywhere close to what they were supposed to come to, and that's why PayPal has dropped 24 points right now. And that's life. So, by the way, so it's interesting that also Visa has slipped as well, and that's not good either. So here we go. So that basically what we're going to do is we're going to say, hey, it's time to start investing. I started looking at certain plays. I like Facebook, but I like Facebook much lower than it is. So I'm going to leave you with that. I'd like to see Facebook in the 230s. You see Facebook in the 230s would be fantastic. If we see Apple somewhere, again, we just talked about it, below 140, it'll be fantastic. AAL, I like AAL right where it is. I mean, if it goes lower, of course, I want to buy more. But if you want to buy AAL, I think it's a great play right now. CCL, I added to some of my CCL position today. I think CCL is a great play also as well. And that also, I believe that Carnival Cruise Lines is going to be in the 40s probably in 6 months. I believe the COVID nonsense will go away, and CCL will be in the 40s, so that's a great play for you as well. RCL, let me see where RCL finished up today. RCL finished right about 80, which is pretty much where I expected, but I can't touch it now. As far as I'm concerned, 80 is no man's land. So RCL for me, if you start to look at RCL, and if you actually look at the chart for RCL, and I don't know if we're going to get a chance to look it up, but if we do, that's great. But if we get a chart, if we look at the RCL chart, you can actually see, oh yeah, like, there you go. And if you look at the 3-month chart, for example, we can see that, you know, it's kind of like right dead center. So I'd like to see RCL right around 75, and I think that would be a great play as a stock or a stock option. I don't know if we can get the 5-year chart up on RCL, if that's possible. And if you look, when the world opens up, RCL will probably be way over 100. It'll be easy to see that RCL will be over 100. But you got to be careful, because if you think about this, right? So I don't know if we can compare the RCL chart to the CCL chart, but if we take a look at the RCL chart, we're at 80, and if we're going to go to 100, that's 20 points, it's 20%. But if you look at the CCL chart, and this is why I think CCL is the better play, if you look at the CCL chart, you see that you're going to go from 22 to 30, no problem. And if you look at the 5-year chart in CCL, you can see that it trades 40 to 50s, is a pretty obvious number. So from here to there, it's going to be a great play for us. I'm going to leave the day quickly talking about crypto. We can see Ethereum is at 2,300 again. Bitcoin is back to 40,000, which I like too. I like to see it. By the way, when crypto goes up, I don't know if you guys noticed this, but crypto gives a tell for the stock market. So when crypto is going up, the stock market is typically going up. Also, Coinbase is one of my favorite new stocks, because Coinbase is moving like crazy. Coinbase was at 240 today. I'd like to see Coinbase at 225. At 225, I'm a buyer. And guess what? At 245, I'm a seller. So anywhere from 225 to 240, you're going to place some stock options on that, and you're going to make a lot of money. I'm Larry Steinhouse. This is Money Chat Now. I hope you enjoyed the show. Please subscribe and like, and we will see you tomorrow.